Hi ladies and gentlemen, this is Alvin from Dr. Wealth, and today I'm going to talk about electric vehicle stocks such as Tesla, NIO, XPeng and Li Auto. And because of the recent hype about this electric vehicle, I decided to do this presentation and give you a bit more analysis on this sector and see whether they can really live up to the hype. So let's go. The usual disclaimer, pause the video if you need to read it. So electric vehicle has come a long way since the very first automobile was created, probably in the 1800s, and it has evolved, right, to have gasoline, diesel, and then to your hybrids, and now we are talking about purely electric vehicles. Okay, so every transition point along the way, there were very major shift in the infrastructure as well. All right, so let's look at some of this major transition points. Okay, so to me, I think electric vehicle is not just a new car model, but we have entered another major transition point in history. So when we look back, it was look back in history, right, in the future, this is going to be a pivotal moment. Okay, so I'll give you two examples. The first one is like when the society became to electrify our homes instead of using your kerosene lamps. Now you have electricity at home, right? We take it for granted now, but in the past there was a shift, right, when Thomas Edison discovered the light bulb, and then Nikola Tesla invented the AC as well as the transformers that allow electricity to flow through homes throughout the world. Okay, so you'll see things like this kind of a substation, right, and inside it is actually those transformers to step down the electricity so that they are safer when they are used at homes. So it created an infrastructure change, and when cars became more commonplace, and that is where the petrol kiosks were so-called invented around the world, right? It started off mostly in the US, where a lot of all these small mom and pop kind of stores were providing petrol for the drivers, right, along the routes to their destination. So petrol filling station wasn't there until cars became more commonplace, right, to fuel up the vehicles. So it created an infrastructure change, and now we're talking about the next change whereby automobiles are going more electric. Okay, and with that, you don't need the gas stations anymore, right? But of course, we cannot have substations throughout the country to charge. Is a bit overkill, right, for cars, but for homes they're fine. So there must be something that will create a different kind of infrastructure to support the electric vehicles in this world. All right, so I think that charging stations, as later we'll see, battery swapping station is becoming more and more of a reality, and petrol stations may no longer be the ones that you see in the next maybe 20-30 years, right, getting smaller and smaller in numbers. So we are entering a phase. So I would say that electric vehicle is not just a new car model, but there is a major changing point. Okay, so we have to recognize that for a start. And the global electric vehicle population is still very small at this current moment. Although there are 1.4 billion cars around the world, alright, but majority are still your gasoline cars. Only about 7 million are your battery electric vehicles or the plug-in hybrid electric vehicles. Okay, so the plug-in hybrid vehicles are those that uses battery as a primary source of power, but they can also be charged by having a generator in a car. Okay, and they also have a plug-in for the charging on for the battery direct charging, right, at homes at charging stations. Okay, but whereas for the battery electric vehicles, they are purely battery only. Right, there's no small generator or anything on the car. Right, so that makes a difference. But together, there are only 7 million out of that 1.4 billion cars in the world, and that means the total addressable market that we are talking about is huge. Right, eventually, if this electric vehicles is going to replace your gasoline cars, this total market we are talking about is several thousand times of the current numbers. of electric vehicles. And for the past 9 years, the growth of these electric vehicles have been phenomenal, 90% per year for the past 9 years. And going forward, the CAGR, a lot of estimates, and I look around, minimally people are estimating at least 20%. Alright, some were 30, some were 40, depending on how bullish the person is when they make the projection. But we can safely say that more than 20% is expected going forward from here. Okay, and out of so many countries that are adopting electric vehicles, China is the one that has the most number of electric vehicles at this moment. Right, 7 million of total world population of electric vehicle, half of it, 3.35 million, is in China. So China is going to be the huge market, and it's going to be the primary market for electric vehicle makers to vie for market share. If they can succeed in China, then it's more likely that they can succeed in the rest of the world. So China is the foremost battleground among the electric vehicle makers. And this is to show you the new sales. Okay, the slide before this is the global electric vehicle population. That means it's cumulative, right? Whereas this chart is to show you the new sales. All right, I'll just point you to this diagram, this chart itself. Okay, it's a busy chart. All right, so let me just point it here. So you can see that in 2019 alone, there's about 2.3 million global electric vehicle new sales. Okay, so it's growing and growing, but you can see that the growth, of course, will slow down at some point in time when the numbers get bigger and bigger, right? That's normal. Okay, and out of which you can also see that the black color, this is China. Okay, China is still buying a lot more, even though they have half of the world's electric vehicle population, but in terms of new sales, they are also about half. Right, so which means China car population for electric vehicles is just going to grow, compound from here even more, and the gap between China and the rest of the world in terms of electric vehicle population will also widen. All right, and this is to show you at the bottom. All right, turn your attention to this part. Okay, this is to show you that the electric vehicle sales in proportion to the total car sales around the world, right? So 5 years ago, in 2015, the electric vehicle sales only occupy about 0.6% of the total world sales of automobiles. But in last year, it have increased from 0.6 to 2.5. Okay, and you can see over the years, this proportion has grown. So that's why I'm saying that it is a possibility that eventually all the gasoline cars will no longer be running the roads. Right, and this is just the beginning. We are at the very early stage of this electrifying our roads, our cars, and which means there can be really tremendous investment opportunity here. And talking about infrastructure earlier on, the electric cars definitely need charging, and one of the problem now with electric vehicles is their range. Okay, because one single charge can maybe last them 200 to 400 km, okay, on average, right? So which means it is not possible for long distance driving at this point in time unless the infrastructure catch up along the highway, along the interstate highways. You're going to put a lot more charging facility for people to charge their car before they hit on to the next milestone. All right, the battery storage capability are not there yet. All right, even though it's already improved significantly over the past decade. Okay, good for city driving within the state, I think it's fine, but interstate kind of traveling is not possible with electric car. You still probably have to rely on your gasoline ones. Okay, and in terms of charging infrastructure, again, China is number one. All right, whether is it the public one or the private ones. Okay, over here I'm just showing you there's on the left is your slow charger, and on your right is your fast charger. Regardless which one, China has more than half of the world's charging infrastructure. So that's why I say if you want to look into the future of electric vehicle, China is the place to be. Okay, because they are really not just experimenting, they are going full force in adopting electric vehicles in the country. And that's probably why Tesla decided to build a gigafactory in China, right, in Shanghai. for that reason, because China is the foremost battleground for electric vehicles, and they make a right move. All right, they make early enough, and now they are enjoying the fruits of their move and their labor. Okay, so later we'll talk more about Tesla versus the rest of the makers. And also because of China government is granting new EV subsidies. Okay, so for anyone who buys a new one, not a resale, a new electric vehicle, they get subsidy in China. Right, of course there are some rules, and the amount of subsidies will vary. Initially they wanted to remove this subsidy this year, but because of COVID-19 they had to extend it beyond to 2022. All right, so they even had set a target that by 2025 they want 25% of the new car sales, okay, to be electric vehicle. So that is why they wanted to incentivize by giving out these subsidies. And probably because of the road pollution in China, we know the air is known to be bad, and probably that propelled the government to really want to change it and incentivizing people to switch to electric vehicles. Right, in terms of subsidies, we are talking about maybe $3,000 to $4,000, okay, depending on the range of the vehicles. All right, so the longer the range, the more subsidy is given. Okay, and there's also a limit, right? Recently they set a price limit that the car, it cannot be more than 300,000 Chinese yuan if you want to qualify for this subsidy, or it's about 45 or 46,000 USD. Okay, so I think this is to limit the subsidies to those more mass market kind of pricing rather than the premium cars, right? Because if you can afford a more premium electric vehicles, that means you're rich enough, right? You don't need any subsidy. Okay, so I think that's a fair deal. All right. Another thing is that the subsidies are going to be cut in each year. So they're going to cut the subsidy by 10% in 2020 this year, and 20% in 2021, and 30% in 2022. Okay, so that's the gradual easing until they totally remove the subsidies, right? By them, probably they are trying to train people to get a head start and get more familiar with driving electric vehicles. Maybe they believe by that time people have the momentum to carry on to buy even without the subsidies. Okay, only time will tell, right? It is a very crowded market. We have incumbents, in fact, all right, although a lot of people are very focused on the newcomers, EV stocks like your Tesla, your NIO, your XPeng, as well as your Li Auto, right? These four companies are the ones in attention, getting a lot of attention now. And I think also because these companies are listed in the US and they are a lot more lifestyle. If you look at their cars, the design is a lot more premium, not so old school, conventional, right? It appeals to the younger generation, I would say, and probably that is the reason why they got a lot more attention in terms of the their stocks. Okay, but that said, the incumbents, a lot of them have already moved into EVs long before these newcomers were around. Okay, like BYD has been producing electric vehicles for the past decades and more, right? And it's backed by Berkshire Hathaway. Okay, Warren Buffett has a stake in BYD for a long time as well. Okay, and then you have your BAIC, your SAIC, your GAC, right? So these are the major state-owned automobile manufacturer. All right, you also have foreign competitors like GM, BMW, and in between them they may have a lot of JVs with the local partners as well. So it's a very, very crowded market, and at this point in time it's not clear who is going to win. Okay, and of course they may serve different segments. Some may serve the more mid-tier, some may serve more of the high-end like Tesla. Pricing wise were also different. All right, everything is really, everyone is just testing out who is going to get most of the customer, okay, appeal to the customers, right? And this is 2020 EV sales, 2020 Jan to August, right? The first 8 months, 2019. Apologize for that. Jan to August. Okay, so based on last year, you can see that based on the last 2 years, right, BYD is leading in terms of sales, EV sales. All right, BYD is number one. Okay, the light gray is 21.8, the dark blue is 21.9. Okay, so both years BYD has been leading, then the second is BAIC, then the third has been SAIC. And you can see that all these are the local players, and the newcomers are like your Tesla is around here, and your NIO is here. Okay, I think for XPeng and Li Auto, they didn't have any cars produced in 21819 yet. Okay, in 2020 they were. All right, so later we'll look at some of their numbers later. Okay, but this is to show you that the incumbents are actually selling more, right, at this point in time. But of course this may change in the future, depending on how this pans out. Okay, so let's just take a look at the biggest incumbent will be BYD, and the biggest newcomer will be Tesla. So in terms of revenue, right, even though BYD sells a lot more EVs than Tesla in China, right, but Tesla's revenue is a lot higher. I think the reason is because of the premium pricing. Okay, for each car they sell, they charge a much higher price, so it's easier to clock a higher revenue, as well as the margins, right? You can see it's almost double. Okay, same thing. Maybe the cost of production is not much of that difference, but Tesla has that design premium, that attractive integrated service. That's all. That they really can squeeze more margins out of the cars that they sell. All right. But in terms of valuation, if you compare the price to sales, price to earnings, definitely BYD is relatively cheaper, right? And you can see on the stock gains, okay, one has gone up 727 times, and the other one is 18 times or 19 times thereabouts. Okay, the red line here is Tesla, right, and this is BYD in comparison for the past 10 years of performance in the stock market. So you can see that maybe relatively you can tell that even though Tesla has more revenue, has more gross margin, but relatively you can see that it is a lot more expensive, right? In terms of price to sales, is 6 times more. In terms of PE, is also about 6 times. Sorry. In terms of price to sales, is about 4 times. In terms of P, is about 6 times. But the revenue is not 4 times more. Neither is the gross margin is 4 times more. I guess is one of the reason the appeal of Tesla, as well as the growth rate is higher than BYD, right, in this aspect. So a lot of that growth and optimism is in priced into Tesla stock. So I would say relatively, definitely Tesla is more expensive, right? The incumbent BYD is relatively more undervalued in this case. So Tesla Model 3 is selling well in China, right? Is selling at around 47,000 USD, lowered the price recently. The range is about 423 kilometers, right? But honestly speaking, based on the cars that I see, I do like the Tesla design a lot more compared to the rest. So all these do play a part, I guess, when it comes to selecting stock itself, okay, because there is natural tendency of this biasness that will flow into your choice of which stock to invest into. So this is BYD Qin Pro, right? This is their best-selling electric vehicle, priced at almost half, right? $26,000, also about 400 kilometers in range. And if you look at the car, it really looked like a normal sedan, right? And more for maybe family, okay? So not as appealing, right? And the share price suggests as well, okay? Although BYD does have nicer looking ones, but this is their best-selling ones. And they also have very mini one like this Wuling Hongguang Mini EV, selling very well like hotcakes in China, because probably due to the very cheap price, $4,200. This doesn't qualify for the subsidy because it's less than 200 kilometers range, but it's probably good enough for singles, couples to really zip around in a city area, right? Easy to park, easy to go around. Okay, so this is a very popular model. This is Li Auto SUV Li 1. Right, this is their first model, USD $50,000. So this is more on the premium end, and they pride themselves in going the extra mile, right? Really going extra mile, literally, 800 kilometer, double that of the Tesla Model 3. And this is XPeng, right? P7 and G3. They have 2 models, and around the same price, 36K, 35K, not that expensive. compared to Tesla, right? Tesla is around $10,000 more, but I don't know about you. The design is okay for me, right? So I'll still prefer the Tesla model a lot more. But the range are quite impressive: 700 km and 520 km. Okay, so this is NIO. 3 models: EC5, ES8, and ES6. And the price is not cheap. It's also on the high end, right? 54,000, 68,000, 55,000. Range is okay, right? The more pricey ones, you can increase the range because the battery power is a lot stronger. All right. I'm not a very SUV person, so this doesn't appeal to me. Okay, but for some people who likes SUV, maybe you find NIO a lot more attractive in this aspect. Okay. One thing to note is that the companies, although they are selling electric vehicles, but how they structure the companies to produce them are different. So for Tesla, it's pretty much vertically integrated. They do most of the things, if not all. So for example, they design and manufacture their batteries, okay, so that they have because battery is a very critical component to electric vehicles. All right, so they want control in that. Okay, and they build and assemble their own cars. They have their own gigafactories, right? And they even have their own dealership. They don't distribute to other people to sell for them, right? They also install their own chargers, and they also have their own maintenance, post-sale support for all the Tesla owners. So from the start to the end, consumer, right? Tesla has control over everything, and there's pros and cons. One is the pros is that you can shift your profit margin between these stages, right? If the cost goes up, you can always pass it, extract some margins from downstream, for example. Okay, another pro is that you control the entire customer experience, right? And you also control all the data they can collect at every stages of the value chain, right? The con of it is the scale of operation is going to be larger. Okay, complexity is going to be wider. They have to solve bottlenecks, all right, along the way. Is not easy. Okay, for example, if the factory is a bottleneck, they probably have to build more, right? Whereas if they outsource it to somebody, they could find another partner to increase the capacity immediately. Okay, so there are pros and cons, but Tesla decided to go more vertically integrated in this aspect. NIO, on the other hand, do not manufacture their cars by themselves. They actually partner JAC, another automobile manufacturer, right, to produce it for them. Okay, so when it is outsourced, then in terms of quality control, all this kind of thing, you may not have the full say. All right, maybe you can make a bit of noise, but you can't really force the manufacturer to follow you to the T. All right, because they themselves sell cars as well. All right, why must I suffer and really listen to you all the way and then earn less in the process? Okay, so pros and cons. All right, but NIO decided to go this way. And in terms of the choice of how do you manage charging the customers' cars, are also different. All right, so there are two main ways. One is that you install a charging station, which I've been talking about. The other one, which is using a battery swap. Okay, again, there are pros and cons. Charging station, it will take at least a few hours to charge a car, right? So you will see that people will have to the owners will have to leave their cars there for charging, and then they have to do something else while waiting for the car to charge. Battery swap station is very fast because it just takes a few minutes to switch out the battery, and then you have a new battery, you can just go. All right. The good thing about EV charging station is that it's cheaper to build. Okay, whereas for the swapping station, it's higher cost. And based on my research, what I pick up is that they need to change. The rule of thumb is about they need to change half of this capacity to break even. That means if the battery swap station has 400 batteries inside, they need to swap at least 200 batteries in order to break even. All right, so because of the cost of constructing it, and you need to put more batteries, and batteries are not cheap. Okay, a charging station is definitely a lot cheaper in that aspect. So pros and cons. Tesla decided to go on a charging station. They toyed with the battery swap station idea initially, but it didn't work out in US, so they just stick to charging station. Whereas NIO has decided to go for the battery swap version. Right, there's a video here. Okay, if you want to watch, all right, so this is by NIO. Okay, you can just take a look. If I can just fast forward for you, if you are interested, you can just go and take search for it on YouTube. All right, so you can see it's just like you can just drive inside a capsule. Okay, and then they will remove the batteries. All right, they will remove the batteries, and then they will probably oops, I think I paused it. Right, so they will swap the battery, the empty battery, all right, and then they'll replace with a fully charged one. Okay, and this take just a few minutes. They will just install it in the back in the car, and then the driver can drive off. Right, so it's a lot faster than charging. Okay, so that's the NIO's preference, and they also have a lot of all these battery swap station at this point in time, and they have done over 500,000 cumulative swap in the last 2 years. Okay, so the numbers are going to increase. All right, so every car manufacturer also build their own charging station as well as a battery swapping station. Right, the batteries they use are different, so you cannot just go to another brand to just swap the battery. So there is a little bit of the exclusivity, okay, and the integratedness of the supply chain. All right, so they are of course they have all these car manufacturers like your NIO, XPeng, Li Auto. The share price have done well, and that also attracted the other side of the naysayers to come up. Like Citroen Research recently has did up a short position on NIO, right, and say that they are unlikely able to be worth this kind of share price. All right, so they think that $25, okay, they'll go down to $25. That was posted on November 13th. And this Citroen Research has also been very famous for shorting Tesla in the past, right? So this is not the first time, okay? But one interesting thing that happened was that Citroen Research actually reverses opinion on Tesla, right? From shorting Tesla, they went to long Tesla in the end. Okay, so they are a convert in that sense. Right, so anything can happen. I think because the field is very new, EV is still at the early stages, so there are a lot of opinions how this will pan out. Right, there are definitely bulls on one side and bears on the other, and it's just too difficult to tell at this point in time. Okay, let's now then compare Tesla with the three newcomers from China: your NIO, XPeng, and Li Auto. All right. So in terms of production, you can see that Tesla has 250,000 per capacity just in China alone, because they have a gigafactory outside of China as well. Whereas NIO, XPeng, and Li Auto is about 100,000. Okay, which is not a problem because in terms of the units delivered, Tesla is about 139,000. Right, this is based on 3Q, just 3Q alone, last quarter. Right, and NIO is about 12,000. And XPeng and Li Auto is about 9,000 each. Okay, so you can see that in terms of capacity, there's no problem. They still have enough, alright, to really ramp up the production. Whereas for Tesla, it's a lot closer. Alright, revenue growth, because Tesla is already quite huge, so the revenue growth at 39% is not as fast as NIO 191% and XPeng at 343%. This is compared to the same quarter in 2019. Li Auto doesn't have any revenue for 3Q 2019, so there's no comparison. Right, but you can see definitely the newer comers, because of a smaller base, okay, because of a smaller revenue base, it is only natural that their revenue growth are a lot higher. But eventually, as their revenue grow, this growth rate will also slow down. Okay, so relatively, definitely the younger players are growing faster, right? And in terms of revenue, you can see Tesla trash the rest. Right? It's in the billions, 8.7 billions, whereas the rest are not even a billion. And in fact, XPeng and Li Auto has not even crossed 500 million. So they are really, really very small at this point in time. In terms of margins, Tesla is highest at 23.5%, okay, because they probably have reached the economies of scale, whereas the smaller players like especially XPeng, they have not done yet, and probably also because their car prices are lower, okay, of the four, okay, because they are selling like 20 over 1,000, whereas Tesla is about 40 over 1,000, NIO 40 over 1000. Li Auto is about 50 over 1000, right? So you can see that this could be a reason why their margin is lower for XPeng, and all are in losses except Tesla, right? So Tesla has managed to turn profitable, not just operating but also their net profit. The rest are still in losses, okay, because it's still early stages. And in terms of price to sales, Tesla is about 13 times, okay. Whereas is still cheaper compared to NIO, XPeng, and Li Auto. Just take note that for XPeng and Li Auto, it's just really rough estimate. I multiply the third quarter earnings by 4 times to get the full year earnings, okay. But going forward, these numbers should be should change, right? Should depending on share price as well as their earnings, okay, as well as their revenue, right? These numbers will change. But at this snapshot, it seems that Tesla is cheaper than the rest, okay. So if you ask me, I think NIO, XPeng, Li Auto, the numbers are not there yet. If you decided to really invest in them, it has to be a lot more qualitative analysis in nature, right? So maybe you think that NIO, you like the battery swapping, you think that more people will go into that, and execution is better, margin is growing, and things like this, okay. So you cannot just base on this set of numbers. Definitely if you use this number, Tesla is a choice, right? And it's still the leader, okay, and Tesla is beating even the incumbent BYD, which is selling most cars in China in terms of its revenue as well, right? So I do think that Tesla is like the Apple in the electric vehicle space. Okay, they don't sell as many cars, but because of the design premium, they were able to enjoy the margin, okay, and have enough profits at the end of the day, right? So they are really the trendsetter as well, okay. So if you ask me for a choice, I would actually prefer Tesla over the other three makers at this point in time, right? It's too hard to call for the new ones, okay. So let's look at then whether Tesla is worth the valuation at this point in time. When we compare to BYD just now, we know that it's not. But I like to look at the price to sales range, right? So this is the average. Okay, it's about 8.1. Okay, the price to sale should be about 8.1 based on past 5 years, since 2015, right? So this is fair. Okay, this is undervalued, right? One standard deviation down. Okay, so for the good part of 2019, actually Tesla was undervalued. Okay, now it has become overvalued at 13.7. Alright, so it's way above. So we just have to wait. Okay, but of course this number can change as well. It will shift depending how the price range of Tesla will move to, right? But at this point, it looks a bit expensive, right? So one can only wait, okay, if you want to bet on the big mega change in the automobile industry, right? Then how about BYD? Okay, some of you maybe, oh, I like to bet on the incumbent since it's cheaper and it's still the #1 producer and seller of electric vehicles. Okay, so this is the same price to sales chart range. So that's 21.5, 5 years, right? So the fair PS is 96, the cheap range is 6, and then the upper end is 127, right? So if you ask me, right, I think the ranges are too wide. Okay, from 6 to 127. In this case, the price to sale range may not be that useful, right? Although you can get some sensing, the indicative sense, right? So I think that maybe around PS 96 is good to go, right? I don't think you will go to PS 6 in this case. Okay, so I do think that probably is the price issue. They probably sell their electric vehicles too cheaply. Okay, so that's why they can't command oh, I'm sorry, this is actually a PE range. Okay, yeah, right. So I didn't attach a PS range. Okay, but it works the same as well, right? So it's just based on range to determine. Okay, so I do think that their margin is an issue because the price that they sell for their cars are probably a lot cheaper. They don't just sell all this kind of consumer cars. They also sell buses, taxis, right? So maybe they were offering a much larger discount to the operators when they sell in large numbers. All right. So these are the situation for BYD. Okay, so you ask me, I actually still prefer Tesla, right? So in conclusion, just want to summarize what we have gone through. So the first is that EVs are not merely new models. All right, it is a transition point. Petrol station is probably eventually going to go away and replaced by charging station, battery swapping station, all these kind of things. And China is the #1 EV market in the world, and it's growing fast. And it's going to be the battleground for all the EV makers. Everybody is clamoring into that space in China, right? Trying to build it up, and the infrastructure is already more chargers than any other country around the world, right? And BYD is the most popular, sells the most new EV cars, right, in China, but Tesla beat in terms of sales and margins, okay, likely because of the design premium and the pricing premium that Tesla is able to pull it off among the consumers. And the newer Chinese car makers like NIO, XPeng and Li Auto are still in their early phases, and you can see their numbers are not that fantastic. Valuations are also higher because of expected higher growth rates in the next few years, right? So if you really want to choose one, it's hard to call, and you need to have a lot more qualitative analysis, right? And they are backed by different people, okay? Some backed by Xiaomi, some backed by Tencent, some are backed by Alibaba, right? So the founders, execution, all these may also play a part in your decisions. And lastly, I do think that Tesla is overvalued, even though I think it is the best play. It is the best EV play in my opinion, but it's not a good price to buy at this point in time because it's trading one standard deviation above its average price to sales in the past 5 years. Okay, that's all folks, and I hope now you get a good picture of electric vehicles, and I hope it answers your questions. And if you like more of such videos, please remember to give a thumbs up, and to subscribe to our channel, and as well as leave comments, okay, whether is it good or where we can improve, and what are some of the topics you would like to hear from us next. Thank you and have a good day.